Up next, Forex Lingual. It's the right time to get you acquainted with the necessary Forex terminologies out there, so we can communicate better through this course. This section brings to your knowledge how trading is done in the dispensation you are in, the Internet age. Understanding the numerous terminologies in the Forex market is often as easy as having a piece of cake. Yummy. First, let us leave off from whence our train dropped off. Internet age of Forex trading. The Internet age of Forex trading is the age we all are currently in. This is the age in which the Internet is a major facilitator for exchanging currencies, whereby I as an individual or a corporation do not necessarily need to travel to the country of my interest to exchange my local currency for theirs. BTC, which stands for Bureau de Change. This is an establishment at which customers can exchange foreign currency online without leaving the comfort of their home. Since the Internet age, many algorithms has been put together to enable more individuals become participants in the foreign exchange community. Now Forex trading can be done from the comfort of your homes. Right before we go into getting acquainted to our terminologies, I feel it is essential to catch you up to the basics of Forex trading. Next up, basics in Forex trading. In this discussion, we would be looking at the various representations of most traded currency, either symbols, pairs, quotes, and bases. As already expressed earlier, the Forex market, otherwise known as FX, consists of different global currencies, each of which are represented by three-letter symbols. Below are commonly traded currencies by their symbols. EUR for Euro, USD, the United States dollar, JPY for Japanese yen, GBP, the British pound, CHF for Swiss franc, AUD, the Australian dollar, CAD for Canadian dollar, NZD, the New Zealand dollar. Here goes our snacky Forex Lingual, as promised. Welcome to Terminologies in Forex Trading. In this session, we would be stating the terminologies and briefly explain them. That should aid you in knowing how to rightly use and apply them when speaking or going through your charts. Let's dive right in. We have terminologies like 1. Long position or a buy. A long position refers to the purchase of an asset, with the expectation that its market value is set to rise. 2. Short position or a sell position. A short position refers to the sale of an asset, with the expectation that its market value is set to fall. 3. Bid price, the market price for purchasing an asset. 4. Ask price, the market price for the sale of an asset. 5. Spread, the difference between the bid and ask prices, the selling price and the purchase price. 6. Commission, broker commissions for operation handling. 7. Swap, an overnight payment for holding a position in Forex is identified as a swap. Since you are not physically receiving the currency you buy nor delivering the currency you sell, the broker should pay or charge an interest rate difference between the pairs of two currencies. Swaps can be negative or positive. 8. Gapping, an opening price significantly above or below the previous day's close with no trading activity in between. This means that a limit or stop order could be filled at a price different from the desired order price. 9. Pips. A pip stands for percentage in point, and is the smallest price movement any exchange rate can make. It measures the amount of change in the exchange rate for a currency pair in the Forex market. A pip is the fourth and final number after the decimal point, with the exception of Japanese yen-based currency pairs, which are displayed to only 2 decimal points. Pips are the means by which market gains and losses are quantified. 10. Pipettes. Fractional pips, known as pipettes, to allow tighter spread. A fractional pip is equivalent to 1/10 of a pip, making it possible to view the Euro-USD currency pair with pipette to 5 decimal places, while currency pairs with yen as the quote currency with 3 decimal places. Pipettes are displayed in superscript format in the quote panel. 11. Lots. Forex is traded in lots. A standard lot is equivalent to 100,000 units of the base currency. This is $100,000 if you were trading in US dollars. A mini lot has 10,000. A micro lot has 1,000 units. 12. Micro lot. Micro lots are 1/10 the size of mini lot, or 1,000 units of a base currency. 1 pip of a currency pair based in US dollars is equal to just $0.10 when trading a micro lot. We would be closing our class here for today, to continue in our next class.